Try what again? What's going on, everybody? Hope all is well. Welcome to another episode of Tech Stocks and Jobs. Episode 138. Hope your weekend has been good so far. We got a lot of we got a lot of things to cover today. Hope everybody is ready with pen and pad. We about to get busy up in this piece. That's what we're about to do. We're about to get busy. S. Taylor, what's going on? Sherwood, what's going on? T, what's going on? Right now, I'm having a debate with D. You all can't see it, so you know how she do. You know, you know how she do. You know how D do. You already know. All right, we got to get busy because we got a lot of stuff to go over. If you didn't catch last week's episode, you should have caught last week's episode where we got into a lot of things. If you didn't catch if you didn't catch Wednesday's meetup, went over training, you missed that. And we didn't do a show last night. Not because we didn't have content though. Not because we didn't have content. All right. So let's get busy. All right. On the screen, we got the Vanguard ETF. And the Vanguard ETF we got on the screen right now is, let me help D out here. Let me help her out. What we got on the screen right now is the Vanguard ETF that we're going to discuss. Title says one unstoppable Vanguard ETF that could turn 200 per month into 820,000 or more, right? Now remember, when they talk about these ETFs, they're talking about strictly from the perspective of, and well, when they say these things, they're talking strictly from the perspective of putting in 10,000. Now, let's say you don't have 10,000 to put in right now. You can always put in this money over time, right? Over time. We're talking the long haul. So, some points they wanted to make. And let me blow this up so you can see, because it's maybe a little smaller. Maybe a little small. There we go. So yeah, that looks big enough. All right. So what they're saying here is the ETFs are fantastic, are a fantastic way to build wealth or wealth building tool. Now I talked about ETFs before, and we went over some last week, and we went over some before. Remember I talked about SMH, SOXX, making returns, and I'm bringing this ETF up too, and we want to look at returns for the next 10, 15, 20 years. All right. So here it's a growth ETF that can help maximize your earnings and potentially beat the market over time. Beat the market, that's key. And however, there are a few risks to consider when looking at this. And then they go into what are the 10 different, or some of the top 10 stocks we like better than Vanguard's index funds. So let's get into this. All right. You could earn more than you think with just a couple of $100 a month, right? The stock market can help you build wealth that lasts a lifetime, but choosing the right investments is critical to maximizing your earnings while limiting the risk. All right, ETFs can be a smart option for those who want low maintenance investment and that requires the next to keep up. Remember, I said ETFs are the ones that go along pretty much with the stock market. They ride along. They don't, they ride along the market, and the mutual funds try to beat the market. Mutual funds have managers that try to beat the market. So remember that, right? Remember, mutual funds have managers that try to predict and beat the market. Okay. All right. So an ETF is a basket of securities bundled together into a single fund. So by investing in one share of an ETF, you'll instantly own a stake in dozens or even hundreds of stocks. So the whole thing with the Magnificent Seven, you may not want to invest individually into one of those. You may want to ride along with SPY, or you may want to be invested in VOO, or VTI, right? And you can go look at the percentages and the holdings in each one of those to see if you like those, and make a return. You don't have to individually invest in the stock in terms of in Amazon or Microsoft. You can go into an ETF, right? You don't have to individually invest in Nvidia. You can go into Nvidia by inside of it an ETF or mutual fund. All right. So let's look at this ETF that they're speaking of. All right. So growth ETFs in particular are funds designed to beat the market. Okay. So you have mutual funds, and then you have mutual funds, and then you have growth ETFs. Right. Growth ETFs. Growth ETFs in particular are funds designed to beat the market. They contain stocks with the potential for above average returns, and you could potentially earn far more with this type of investment than say a broad market, like again a broad market fund like the S&P 500 ETF, right? So there are countless ETFs to choose from, which is unique, and which with its unique advantages and disadvantages. But one of the particular options is the growth ETF VUG. All right, it could potentially return $200 per month into $820,000. Here's how. Now, before we get into that ETF, I pulled this ETF up, right? It's a growth ETF. It traded on the New York Stock Exchange at $338 yesterday. It had some after hours movement. But let's go look at this ETF. If we look at it year to date, it has returned 8.75%, but in a 5-year period, it has returned 118 and 118.33%. Now let's look at what's in this. It has an expense ratio of 4%, meaning it's $4. Right, that's the fees for it. It's $4 as the fee. Right, so it got a total assets under management $222.2 billion, a total holdings of 211, and then they also get into whether or not if it's in an ESG fund, actively managed, diversified portfolio, so forth and so on. Right, so let's get into what's in this ETF. Well, in this ETF, you'll see you got Microsoft, you have Apple, you have Nvidia, you got Amazon, you got Metal, you got Google A, you got Google C, you got Eli Whitney, Eli Lilly, you got Tesla, you got Visa for V, and then you got a set of sub industries such as system software, excuse me, semiconductors, and we talked about semiconductors, ASML, we talked about. We also talked about semiconductors under SMH and SOX, SOXX, right? Interactive media, automobile manufacturing, and so forth, right? This is 50, the top 10 holdings that they have account for 56% of the holdings or the assets under management under here, right? So dividends, how have the dividends been coming out? Well, the previous dividend was 58 cents or 0.5847. It pays out quarterly. So here's what it looked like in March of last year, 2023, June of 2023, September 2023, and in December it hit 0.58. It almost seemed like it doubled itself from here to here, almost, right? So that's what they're showing you there, right? So now let's go back. I'm gonna move this over because I want to. We're gonna go back to SMH and SOX in a minute, but I want to pull this up and see what they're saying. All right, the Vanguard Growth ETF contains 208 stocks. Now we saw what those stocks were. We just went through what those holdings were. 208 stocks with the potential for higher than average return. It also has a rock bottom expense ratio of 4%. We saw that. And you'll pay $4 per year for fees for every 10,000. That's why I mentioned the 10,000. You pay $4 for every year for fees that's under that you own for at $10,000. So every $10,000, you're gonna pay $4, right? This is lower. This is far lower than many other ETFs, which could save you thousands in fees over time. Right. One advantage of this particular ETF is that it aims to balance the risk and the reward through its mix of stocks. The fund's top 10 holdings make up half of the entire composition, and these stocks are household names such as Amazon, Apple, Microsoft, and Visa. I will bring it back over again, so you can look and see what the holdings are again. The top 10 holdings: Microsoft, Apple, Nvidia, Amazon, Metal, Google A and C, Eli Whitney, Tesla, and Visa are the top 10 holdings that account for 50%, 56% of this. So if you wanted to be in Microsoft, Apple, Meta, Amazon, Nvidia, you could use this particular ETF, VUG, as something that'll give you the run. So let's go look at Google Finance. Let's go look at Google Finance. And what I want to see is really how long this has been around, right? How long has this been around? Let me pull it up right quick. And then let's look at VUG, because it looks like it only been around about 5 years. It looks like it's a newer ETF. So VUG, yeah. So if I go 5 year, and then I hit max. Okay, here we go. Max. Looks like it's been around 2004. So okay, it's been around longer than the 5 years. So that's why I want to come here and see what I'm getting. So we got a 10-year run on this one. So at a max, it has returned 288 well, 582.116% and a max of 288.52. Right? So that gives you a bit, this one gives you a better look at one, the upswing of it. And then on the other one, you can see the dividend payout. So let me go show that over time. So here's the dividend payout over time. So here's what that dividend looks like. Look like they had a good run here in the last Q. Looks like Q4 it really pays out well. Q4, because you can see Q4 from 2021 to 2023, and this is 2021 right here. Q4 it had a nice payout on a dividend. Here you had a nice payout on a dividend, and it looks like it finishes strong at the end of the year. Looks like a good strong finish at the end of the year. Right. So that's what I'm seeing in there. Right. All right. So here they break down the dates and the dividends and the income earned. This it gives you all of that all the way back to 2004, right? To 2004 when it first entered. Right. And in 2004 first entered, looks like it might have been $48 when it first enters. That right? Let me double verify that because right now it's at 338. That's not right. Mm-mm-mm. Distribution nav. Let's look up distribution nav. Make sure I'm telling you right. All right, the distribution nav is the net asset value, is the net value of an investment fund assets less its liabilities, dividend by the number of shares. NAV is commonly used as a per share value calculated for a mutual fund or an ETF. Now bring this over. Let me bring this over. So we have some idea here what we're looking at. All right, so NAV. I hate when it does that. Here we go. Net asset value is the net value of an investment fund's asset less its liabilities divided by the number of shares outstanding. Most commonly used in the context of what an ETF is. Let me see if I can get that. I always have to click on this. And then I can click out of this. Here we go. All right. The NAV is calculated by the end of each day trade. NAV is calculated at the end of each trading day based on the closing market prices of the portfolio securities. Right? So that's what they're calculating there, right? Let me see if I can go back to it. So that's what we got here. Let me get it back to where we were. So they minused out the actual, that's 20. Oh, it's not in order anymore. Let me see if I can get it in order. "2023, 2018, 2016." Okay, cool. All right. Yeah. All right, cool. So this is minus the liabilities. That's what this is. That's why we don't see at 338 here probably. That's minus the liabilities. And we can see total distribution 0.58. That was in 2023. And that's what you see here, that 0.5847. That's that closing there. That's that closing there. And then this one here is what the dividend was in Q3. So from Q3 to Q4, that's what you're seeing there, right? So again, ticker symbol VUG. All right, so let's go back to what they're saying about VUG. All right. The other half of the fund is made up of a dozen smaller stocks. We saw what that potentially was, software and software. While smaller companies often carry more risk, they're also more likely to experience explosive growth. If any one of these stocks become a superstar performer, you could see substantial returns. This balance of a juggernaut stocks, along with up and coming companies, can help maximize your earnings potentials while still limiting risk. You still likely experience short-term volatility, but with half of the fund devoted to larger, more stable stocks, there's a greater chance your investment will still see a long-term growth. So generating hundreds of thousands of dollars. It's impossible to say exactly how any investment will perform over time. And growth ETFs in particular can be more volatile than other types of funds. Remember, their goal is to beat, right? And this is a growth ETF. Understand that this is a growth ETF. That's why, right? However, it can still be helpful to see how this ETF has performed in the past. Over the past 10 years, the Vanguard Growth ETF has earned on average a rate of return of 14.74% per year. Keep in mind, though, that your investment may or may not earn those types of returns going forward. So, on average, it's returned 14.4%. The average return that everybody base everything off is 8%. So anytime for me, anytime you can do 10% or more, you're doing good. You're doing good. Some people like 20%, I'm sure. 26%, yes. But we're talking stocks here, right? We've seen some we and I'm gonna pull up SMH and SOXX. Right. If you invest $200 a month, here's approximately how much you could accumulate over time, depending on whether you're earning 11%, 13%, or 15% average rate of annual return. All right. They're saying in 20 years, they said an average portfolio at 11%. And let me pull this down because I can't see the 15% on here. Let me go back up. Yeah, right here. So the average return at 11% is 154 for 20 years, 194 for 13%, and if average 15%, it'd be 246. But if you held it for 35 years at 11%, an average return of 820,000. um and then another one at 13% at 1.3 million, and then at 15% at 2.15 million. So they're giving it the 35 years on that return. 35 years on that return at 11%. And my assumption is putting in $10,000 in at $200 a month on 11%. Let me see if that's true. Let me get my calculator out because you got to have a starting number here. So let me go $10,000 at $200 a month at 35 years, and we're gonna do 11%, and I'm gonna do two up and two down, and we're gonna calculate that. All right, so this is what I get. You start off with an initial $10,000. You put in $200 a month. You a length of time of 35 years, an annual estimated rate of return at 11%. I did a variance of two, meaning I can go down to 9%, 11%, and 13%. Oh, and it's in a way D. They can't see that. So 11% again, 9%, 11%, then 13%. Compounded annually comes at to 1.2 million. Now let me change this to monthly. It's 1.4, and then let me try quarterly. Yeah, so it's got to be annually. as close as I can get it. So annually, we have a return of a variance at 9% of 720, 11% is 1.2 million, and 13 came out to 2 million. On theirs, it came out to about 1.3 at 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 13%. Right. So I'm not sure if they're starting off at let me see. To reach 820 in total savings, you'll need to invest consistently for around 35 years while earning 11% average rate of return. If the ETF continues earning returns similar to the past decade, though, you could potentially earn far more. Right? So I'm not sure how they. I'm assuming they came out with 10,000. Would they invested at 10,000? Let me change it. Let me change it. Let's change this because the only thing I can see, maybe they invested less and say they did $5,000. And let's calculate that. Nope. Let's see. I know they're not starting at $200. Oh, okay. They're starting at $200. They're starting with an initial investment of $200, and they're saying you put in $200 every month, and you do it for 35 years. It could potentially return you $827,000 in 35 years. Now, if you started out with $10,000 and then did an investment of $200 a month for 35 years, your investment will be 1.25 or 1.21, which is not bad over 35 years. Say if you're 20 or 25 and you let that ride for 35 years and you get, and that's your go-to that you're putting in, and you're checking that and it's returning at 11% or potentially more, you could be a millionaire. And see, you're 20 at 35, if so you'll be 55. If you're 30, you'll be 65. 65, right? But let's change it. Let's say you only got 30 years. At 30 years, you'll be at $706,000. So you can see how much 5 years actually, the time in the market adds the value there. The time in the market adds the value there. All right. So they said to reach this 820,000 in total savings, you'll need to invest consistently for 35 years or earning that modest risk over 11%, which is slightly higher than the market's historic value of 10%. In this ETF, if this ETF continues earning returns similar to the past decade, though, you could potentially earn more. Before you buy, it's crucial to understand that the risks that come with this type of investment, past performance, isn't indicative of future returns. So, although this ETF has historically earned the above average returns, there's no guarantees that it will continue to do so. Also, growth ETFs tend to be more volatile in the short term than broad market funds like the S&P 500 ETF. While they're designed to beat the market over the long haul, the extreme ups and downs during periods of volatility can be difficult to stomach at times. If you invest in this ETF, be sure you're willing to ride out the storm during the inevitable market downturns. The Vanguard Growth ETF can be a fantastic option for those looking for low effort investment that packs a punch. While there are never any guarantees when it comes to the stock market, by investing consistently and keeping a long-term outlook can help you earn more than you think. Should you invest $1,000 in Vanguard ETF funds, Vanguard Growth ETF right now before you buy shares in the Vanguard Index ETF? The Motley Fool stock advisor analyst team just identified blah 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 blah. All right, they talking about Nvidia, but yeah, they're saying here's some 10 stocks. If you do, if you don't want to invest in it, here are 10 stocks that you can buy, and you can see it's hey, give me your information and go from there. All right, VUG. All right, this is how much 28% of the country has saved for retirement. Nothing. Zero. Nada. Zilch. All right. It says between 25% and 35% of all demographics ages between 18 to 64 years old report having nothing saved for retirement. Nothing. As 28% of Americans have nothing saved for retirement, 39% aren't contributing to the retirement fund, and 30% don't think they will ever be able to retire. So you're not contributing and you don't have nothing saved. What's going on, King? How you doing? I know Miss Phoenix is disturbing, right? I'm gonna talk about it every week to y'all till I force you all to put $100 away every month. I mean, I'm not asking for a whole lot. Just put $100 away. $100. Can you at least do that? I know you do that. I know for a fact that y'all probably drink $100 a month in water, tea, lemonade. $100. That'd be $1,200 for the year. Put $100 away. Put it in a high yield savings account. Let the money work. We're gonna talk about that in a minute. Between 25 to 35% of all demographic ages between 18 and 64 years old report they have nothing saved for retirement. How much is needed for a secure retirement varies by person. Now I want to say this. I want to ask this question because they Timu savings. Yeah, I'm just playing. They Timu. They buying on Timu. Listen, I want to ask this question. I want to ask this question to the 35 and older group. When y'all go on a date and you're supposed to be dating for marriage, I'm assuming that's what you're doing out here in these streets. Do you look at people's do you look at where they're at income wise? Do you look at where they're at um financially? Are you looking at finances? I just want to know. Or you're like, no, he a good man, Savannah, and you running with that? I just want to know. Are you looking like, well, at least she know how to cook? I want to know. Like, are y'all looking at finances when y'all date? Or y'all just like, like I'm gonna just throw it out there and maybe she got something and maybe she don't. Or like cause I'm trying to figure out like how do y'all date for like a year or two and then y'all be like, well, it's time to get married, and then you ask about finances. Like when does it come up? I don't know. I'm asking. Does it come up the first couple of weeks? Does it come up? Does it come up the first month? Uh, when is that? When is a good time to have that conversation? Because there's a website out there, a dating site out there that people go on that they date based upon your credit score and your debt, your DTI. There's a dating app out there that's dating on that. They're dating based on your DTI, and they're dating based on your credit score. I don't know. You tell me. Are y'all out here dating like that? I mean, you gonna be called a gold digger. You gonna be called a child. You gonna be called everything else anyway. I've come to realize whether you work and go to school and have your own thing, or if you work and you stay at home with your mama, or if you work or don't work, you just gonna be called something. You're gonna get labeled something. So you might as well make the best of it, of the label. Like you might as well make the best of your life. That's just what I've determined. That's fine. We can start setting that up. I'm just asking questions because I want to know: do you at 50 get with a woman or a man who don't have nothing saved up for their retirement? I want to know. If he 50 and he don't have no money saved up for retirement, do you teach him? If she 50, do you get with them and then they don't have no money saved up for retirement? Do you teach them? Mm-hmm. I'm asking questions. You tell me. Y'all out here talking about it's the character of the person. Y'all out here talking about it ain't about you can teach people stuff. Y'all out here talking about that. Y'all keep talking about the character of the person. I'm sitting up here like character, Dre, Dre, character. Yeah, I heard about Gail King story. I'm just asking questions because I want to know how you all go out on these dates and y'all don't even know whether or not somebody got some money saved up for retirement or like. Oh, okay, let me ask this question: can you date someone that doesn't know what a 401k or an IRA is? Can you date someone that does not know what a 401k or an IRA is? This is across all ages. They've never heard of a high yield savings account. They don't know what a 401k is. They don't know what an IRA is. They've never heard of a pension. I'm asking, can you date someone like that? Right? So while you answer, I'm going to continue. My answer is no. It says how much is needed for a secure retirement varies by person and the situation, of course. But a study from Northwestern Mutual in 2022 found U.S. adults anticipate they would need 1.25 million to retire comfortably, while a 2023 Schroeder survey put the figure at around 1.1 million. Going bank going go banking rates, meanwhile, found that a quarter of 1,000 people surveyed think they can retire with less than $500,000. Another quarter believes it would take somewhere between half a million to a million, while 30% expect to cost their retirement to cost higher in the seven figures range. So why aren't people saving for retirement? Some don't have access to retirement plans, although participation is low. Now, let me say this because I've been going back and forth on these truck driver websites and looking at these truck drivers things and so forth. Some truck drivers say they don't have access to a retirement account because they may be owner operated or something of that nature. Anyway, this is what I'm the feedback that I'm getting. There's like they can do better in the stock market on their own than they can within the 401k. So then I asked the question is, well then how do you save up if you're playing in the stock market? Like what are you doing and what are you playing in the stock market? Because there's no incentive, there's no match, there's no company, there's no contribution from someone else. I'm just asking questions because I want to know, like, again, I just never met somebody who retired from truck driving or plumbing. And they keep telling y'all not to get degrees when everybody else is going to get degrees. And they keep selling y'all short and y'all keep listening to them. And y'all keep trying to y'all try to refute numbers tell you the most people that make the most money are the ones in STEM, and you refuse to do it. You refuse to get tutors to help you with math so you can go into STEM. I don't understand. Stop fighting. Don't fight the numbers. Don't fight the numbers. And if you're gonna start and if you're gonna be a plumber, go buy a plumbing business. Don't you ain't gonna make it. Ask me, tell me this: how many people get their house plumbed and the guy is 75 or 65? or 62. How many plumbers come to your house that's in their 60s? Sherry Wood said, I wouldn't want to date someone who doesn't have a minimum of six figures in their 401k by 30. Dang, Sherry, by 30? Dang, Sherry. Sherry said, you ain't got six figures in your 401k by 30. What we doing? Okay, Sherry, what if they got six figures in a bank account, but they ain't got it in a 401k? Yeah, you got to have a class on math, but you can get some. You can go to community college and get those math classes. Hell, I even thought about going back for math for Cal 1, 2, and 3, just as a refresher for myself, just as a refresher for myself, right? So why aren't people saving? Some don't have access to retirement plans, although participation is low, even the accounts are available. The Bureau of Labor Statistics says 69% of the private industry workers have access to employer-based retirement plan. But in the Biden's administration, they also said that they're forcing employers now that all employers have to offer 401k. That came out last year, right? It says the private industry has have access to employer-based retirement plan, but only 52% participate. Other obstacles include inflation, debt, as well as low financial literacy. Starting saving too late, being inconsistent in making contributions, and depending on wants without seeing saving for retirement as a need. The study revealed that the youngest generation of adults, Gen Z, is actually getting a jump early on retirement savings. As many as 16% of the 18 to 24-year-olds put 24-year-olds put 4 to 6% into a tax advantage retirement account, more than any other demographic go banking rates found, right? Despite the overall retirement savings shortfall, nearly one quarter of respondents, 23%, think they are able to retire early. Roughly another quarter, 24%, anticipate retiring by 65, right? Which is still earlier than the full retirement of 67. I'm trying to do 60, and I may push to 65 and be on my own retirement at 65. And really at 60 on my own, draw down on my own, and then they ain't gonna never let Social Security go away. I, whatever. You watch, it'll still be here. And then flip over to six, probably flip over at 70. I won't flip over at 67. I'll wait it. I can ride it out for another 10 years. So that's why you got to look at like when you want to retire and the money that you're going to use early on, because early when you retire, most people travel. So you're probably going to have a big bulk of your money early on in retirement that you're going to be using because you want to travel. And as you get older, you probably do less traveling internationally. You'll probably travel local or whatnot. And it depends on how you're feeling. Depends on your body too, right? So by the time you hit 60, you're probably going to be traveling, you know, internationally. You're gonna go places. You're gonna do things. And you're not gonna want to go on the Disney cruise with all the children. You're gonna go on the adult Disney cruise. You want to go live you want to go to the place, and your cruise, your trip, your overseas trip may be 10,000. It might be. Who knows? Because what, you want a helicopter ride? You want to eat at the finer restaurants? You want nice living? You want nice sleeping quarters? You want to do some things? I don't think you want to be in the outback with the lions, tigers, and bears. Oh my! I don't think you want to do that. But hey, you might. I don't know. But that safari might cost you a pretty penny, right? And see, people start out not knowing anything, so either they want to learn or they ignore the situation for life. Yeah. So 60 To 65, Miss Phoenix, thank you. Do you believe Social Security pot will dry up eventually? No, I don't. And it's funny because I asked my mom this, and because she worked at Social Security office for 30 years, 30 or 35, one of them. And I asked her about this. She was like, they're going to have that money there. And I said, why? She's like, because there's too many people that rely on that money. She said they'll cut funding from something and they'll go put a pot of money in there and it'll keep going. She said they've been talking about it's going to go away for 30 years. It ain't went away yet. They keep talking about it's going to go away. And then all of a sudden, Congress finds some money and put the money in there. So, again, that's what I'm. And you gotta remember, it's a lot of people that live off of Social Security. So if Social Security go away, you think we got homeless problems now? Shh. You think we got homeless problems now? Shh. Right? So again, 65, 67 is the retirement age, but they're trying to push that to 70 because people are living longer. But what I'm trying to tell you is if you set yourself up and you say you retire early, you're probably going to be living off of the money that you have in your 401k until your retirement kicks in full benefit. Now, it depends on if you're waiting for that full benefit to kick in, right? I looked at my full benefit. If I did retirement at 70, it was 5,000 a month. And I'm like, okay, at a minimum, I'll be at 5,000 a month. It's actually probably more, and I need to call them because some of my income isn't reporting. But at 5,000 a month at a minimum, you can then simply say, okay, at a minimum, I'm gonna be at 60,000. So if you got everything paid off, you be okay. You won't be thriving like you normally would, but you be okay. Now let's add in, let's say out of your retirement vehicles, your Roth, or what have you. Let's say you could pull down another, say, let's say you're pulling down 60. Let's say you could pull down another 150,000 or another 200,000. You'll be at you'll be at between 200 to 260 a year in retirement income. In retirement income, right? So it depends on the lifestyle that you want to live. It depends on the lifestyle that you want to live. Some people want to live a lifestyle where they're okay with, my bills are 3 to 5,000 a month, and the rest I got. Now we got to remember this too. The money that you have saved up still continues to compound. It still continues to compound. So in theory, if you set yourself up right, you could probably have with your inclusive with your Social Security and maybe another account set up. In theory, you could probably be living off of $10,000 a month and never even touch your 401k and let your 401k just compound, whatever the case may be. But then you got RMDs. So then you got to think about, okay, when do I have to do a Roth conversion and what does that look like? So that's why you got to get with one of your financial advisors, because now you got to look at, okay, I got to do a Roth conversion. So you got to pay taxes on that. And when is the best time to take it so that you don't get burned in the end? So then that's when you start getting into like, okay, what is a Roth conversion and how much should I be contributing to my Roth? If I have a Roth IRA or a Roth 401k, how much should I be in my Roth 401k, and how much should I be in my Roth IRA? I mean, my Roth 401k on the Roth side and on the traditional side. And then what is and you could have an IRA too. How can I backdoor my IRA and have money in my IRA? And oh, by the way, I still contribute to my HSA. And then what does that money look like in my HSA? Because at 70, it doesn't have to continue to go. And when you're contributing, it doesn't have to still be used for medical benefits. In your HSA, you could have another 150,000 or $200,000 in there, where you're getting money out of that for whatever and used for whatever. It doesn't, after 70, it doesn't have to be used for medical expenses. So again, you can have pots of money making it work for you. That's why I think you all need to see like a financial advisor. And you don't have to do it every month. You can do something quarterly or once a year, where you actually go talk to and have a discussion with what your options are and what could happen, right? All right. So, despite an overall retirement savings shortfall, nearly one quarter of respondents, 23%, think they're able to retire. Roughly another quarter, 24%, retiring at 65, which is still earlier than the full retirement of 67 for people born in 1960 or later, according to Social Security. As of 2022, the average retirement age was at 61.5. 61.5. Now, I wonder how many black people are actually retiring at 60. I wonder how many black people are actually retiring at 60. All right. I'm going to close that. All right. The seven A rated, and when they're saying A rated, they're actually talking about those, that rating scale. Let me go back here. Oh, it might have logged me out. I hope it didn't. I'll pull it over. Okay. Because here's the Morning Star ratings right here. Right. This is, I pulled up this is SMH. I pulled up SMH. We talked about it the other week, right? And you can look at their dividends over here too. It's the one that got, these are the ones that have the semiconductors. And we're getting ready to get into that, but you can look at it here, where it shows you what that looks like from 2012 all the way to 2023. Now, if you look at this one, their dividend is not quarterly but yearly. The last one we looked at was paying out quarterly dividends. This pays out dividends of a yearly dividend. This is a yearly dividend, right? Traded at 218 on Friday. Um and we can look at the max on this. Let me shorten this up. Let me go back to it. Right. Still on there. Okay, here we go. We can see the dividends here. D for the dividend. That's what the D stands for. That dividend there. Dividend of a dollar. Dividend of a dollar. Right. Pretty good on the dividend return there. Pretty good there. Right. And here's the holdings. All right. And you can see the ratings over here. Morningstar ratings. Right. For a 10-year run, it still got 5 stars on a 10-year run. Right. Historic high return. Historic above average. Morningstar stocks. Right. Falls under growth here. A large growth. It falls under large growth for this particular stock. The other one we looked at was a growth stock, but I don't think that I don't think that was a large growth. I think that might have been a mid. We could go find out. Hold on. Let's go and see what VUG falls under. Falls under large growth. Large growth. Right here. This is growth down here on the bottom far right. And this is large. So it falls under large growth. It says we don't have to report on this dividend income until we take some, right? You just reinvest. right? That's how taxes situation. Yeah, yep. You just reinvest the dividends. When you take them, yeah, you got to report any takings. You don't have to report. All right, so let's get back to it. All right, so quantum computing. They're saying the seven stocks, um, um, A rated. So AMD, Nvidia, Microsoft. So AMD is AMD, Nvidia, NVDA, Microsoft, MSFT. So we can go and we can grab and we can look at MSFT, right? And you can look at their 5-year return. You know they've been around longer than that, but you can look here. You can see the earnings announcements. You can see the dividend here. The earning announcement here came out 1/30/2024. You can see whether the EPS beat. The next one is April the 30th. So you can put this on your calendar. If you're invested in Microsoft, April the 30th is their next earnings call. April the 30th, right? And you can take a look at their dividends. Let me see right here. We do show more. And this is what it looks like. Remember, I talked about the kings and aristocrats. Remember, I talk about continuous increasing dividend growth. That's why you see that continuous increase, continuous increase, right? 2016, $1.47 for a dividend, and in 2023, we're at 279, and it's had a steady. It started at 8%, but they've had a steady 10% over the last what almost 8 years. Eight no, almost 6 years. 6 years. So they're at 10%. So we can expect a 10% growth here with Microsoft right here. So we're expecting them to increase another 10% for 2024, right? Increasing growth in the dividends, increasing growth in the dividend, right? And this one looks like they're paid, their dividends looks like it is and let me go back up here. It looks yearly, but it shows you right here. Let me look. Okay, they do have quarterly dividends. So here every quarter, 68 cents, 68 cents, 68 cent, then 75 cents. So they got quarterly dividends. They're quarterly, right? So increasing over time. This is just the total sum of each year. The total sum of each year. So 10% on 2.79. This is what it should you should be expecting. Should be expecting. Okay? Yeah, regular dividend frequency is quarterly, right? 10-year, their 10-year growth rate is 11.8%. And on a 3-year growth rate, 11%. So it's okay to be in it's okay to be inside of Microsoft, but again, you may not want to be in the individual stock. You may want to be in the actual ETF. So you go find an ETF that has Microsoft in it, or you could be in the individual stock itself. All right. So let's go back over here to the other ones. These are all the ones that they're saying again for quantum computing. AMD gets high remarks. Nvidia, high remarks. Microsoft, if you're looking to be on the cutting edge, then artificial intelligence is old hat. Even if you're open to investing in tech stocks, instead, the next wave of innovation, and I've said this, I've done countless of shows on quantum, on quantum. Somebody gonna name their child quantum. But again, I've talked about this, and I'm gonna keep drilling it into y'all make a pull. You should make a pull on Nvidia. They're actually talking about doing the split. So you should have made a pull on that at least, right? If you're not in Nvidia, at least be the Microsoft. What you waiting for? What you waiting for? And if you can't afford one stock, DCA, dollar cost average your way into the stock. Buy a slice. $5 is the minimum on Schwab. $5. Just put in, you go in there and you say, do, slice $5. Dollar cost average your way into the stock. You don't have to buy a whole share, right? I know you got $5. I do enough for you. You tip her $5. I do enough for you. You got boyfriend? I listen. If you paying them $5, you can pay $5 to yourself. DCA. So if you're looking for cutting edge stocks, cutting edge AI is the thing. So AI and quantum. All right, so let's get into it. Classic computers, which we've used before, operate on a binary system. They're equipped with chips that use bits to perform computations. The bits are limited, though you can only show a value of 0 or 1. So it takes lots of zeros and ones arranged in specific orders for a computer to do anything. Quantum computing changes the game. Though these computers operate with a subatomic particles such as electrons or photons, quantum bits allow the particles to exist simultaneously in more than one state, which increases the processing power. Right? Why is that important? Well, we don't care about that right now because I've talked about quantum. I'm not going to go into all of that. Let's go talk about the stocks. AMD. All right. AMD. Next one up, NVIDIA. NVDA. NVDA. Let's look at NVIDIA. NVDA is up to $800 right now. Look at those dividends on that. Look at that. 0%, just steadily. Mm-mm-mm. Let's look at the 5-year run on it. Look at that upswing right there. Look at that. At $492. And now it took a big jump up to 800. Super huge. Look where it was in 2019 before the pandemic. Before the pandemic. We down here. Right? And then we up. Here's the dividends. An annual dividend yield of 0.02%. The next earnings call is 5/22/2024 in May. Here go the historical earnings. All right. Peers is and his evaluation. They got, this is what they compare themselves to: TSM, ASML, AMD, and QCOM, Qualcomm. Here's the assets, here's their liabilities. And you can go get into these things and look and see what their liabilities are like. Do their liabilities outweigh their assets? You can get into that. Right? Let's go up here and check out the rating. They got a 3-4 rating. A as a leader, environment, social, and governance. So here they gave them a D. Schwab has them as a D. right? They got them as a D. And here's the ratings report. And you click on the ratings report. D is underperform. They say sell. That's what they got them right now. They got it listed as sell. I will wait for the split. You could take your gains, stay in them, and then we'll let them split. Right? Above average price volatility. Earn quarterly positive and negative earnings. So they're positive here. They're showing you the positive side here. And you can get into what other people think about them. Somebody else is like buy. Somebody's like hold them for the long term. I'm saying hold Nvidia for the long term. That's what I'm doing. Or you can go get them in an ETF and not have to worry about the actual stock. But here's the report. One day we should get a report and read through a report so that we get some understanding of a report. Right? So you get some understanding of a report. All right, let's go back to it. All right, so we had Nvidia, Microsoft, IBM, and IBM is having layoffs. By the way, IBM is having layoffs. IBM Super Microcomputer SMCI, SMCI, Dell Technologies. I wonder if HP is gonna be on here. Quick, Quick Logic Corporation, another intriguing quantum computing stock is Quick Logic, QUIK, a semiconductor company that makes low power multi-core semiconductor platforms and hardware. Those are the ones that they're saying look at on the quantum side to invest. I think the easier ones that you can stay with are Nvidia, Microsoft, and AMD. Right, those are the ones that you can stay with. All right, next up, here are seven stocks that Warren Buffett is selling. You know, there are people that invest like Warren Buffett, and they just follow all his stocks and whatever he does. All right, let's go. Berkshire Hathaway A and B CEO Warren Buffett has been running circles around Wall Street flagship index, the S&P 500, since the reigns as CEO, and the aptly dubbed Oracle of Omaha has overseen an aggregate return in his company's Class A shares of 4,000, I mean 4,922,7,141% as of closing on March the 8th. This compares to a total return, including dividends, paying around 33,500 for the S&P 500 over the same period. So let's look at Berkshire and Hathaway. Uh, Berkshire. I think I can do 8. Let me see. Oh, here we go. 8. This is how they got it. So to get one share of Berkshire Hathaway A is $618,000. $618,000. One share. You could probably buy one share and ride that out for the rest of your life. You could probably buy one share and ride it out for the rest of your life. You just let it you just let it sit there just like one share. BRK/B is $408. It's returned 103. So people are probably more likely buying B versus A. Now, don't get me wrong. There's some people that got A, and they show up to the Berkshire Hathaway annuals meeting. I don't know if I played that. I played part of that video. I didn't finish it. I need to go back and finish it. It's 4 hours long, but I got some good tidbits out of that. I know I presented those to you all. No dividends. You don't get no dividends. You don't get nothing. So if you come over here to the Schwab Equity Ratings Report, here's what it looks like for them. Here's what they're saying. They say outperform. They say buy. They say below average volatility, right? It's got a B ranking, right? And they show you what the quarterly positive up arrow, quarterly positive earnings surprise announcement. So they're just showing you the up arrow on that. I'm gonna see. I don't know what's in blue and what's in green. Don't tell me. It's not telling me what's in blue on this line, on this here, what's in blue and what's in green. They also have whether or not their ESG ratings on this particular one. It shows their revenue and what that's expected from 2024 to 2025, and no dividends. So they're breaking that down, right? So that's Berkshire Hathaway B. Berkshire Hathaway B. All right, so let's go look at what Warren Buffett is talking about. All right, Warren coattails have been a money making strategy for decades, which is made all easier thanks to the Form 13F with the SEC. A 13F provides a snapshot of what Wall Street smartest and most successful investors are buying and selling, and it is required quarterly filing for money managers overseeing $100 million or more. So let's go look and see what he's talking about. Berkshire Hathaway most recent 13F filings. So you can go look up 13F filings of companies. So they're selling some shares of Paramount Global. It looked like they're selling half of the shares in Paramount Global. They sold 22 million shares of, or 23 million shares of HP. Again, I put HP under that realm of like Dell, right? Apple, they sold 10 million shares of Apple, but they got over 900 million shares of Apple. The Marco Group, they sold this entire position in the Marco Group. They got rid of it. MKL, they got rid of it. Number 5 on the list, Stone Company. They sold all their shares in the Stone Company. All 10 million. Globe Life, they sold all the shares, 831,000. DR Horton. Now this is the one we've been looking at, DHI, with the housing. So they sold all their positions. They sold all 6 million almost of their position in DHI. This is one of the biggest head scratchers of all, considering the shares that DR Horton were only acquired during the June end quarter. Since Warren Buffett is a firm believer in holding wonderful businesses for extended periods, the purchase and the subsequent sale of DR Horton suggests that Ted Whistler and or Todd Combs were the masterminds behind this relatively quick trade, right? So those are the stocks that he got rid of, and then you can see what he's still in. He didn't get rid of all of some of those shares, but he got rid of the majority of those. All right. High yield savings account. This one came out on the 16th. I'll just click on this. This is just what Smart Asset has running right now, or what they're seeing. 4.35%, 5.5 for Betterment, 5.35 for Brio, Capital One 5.1, and USAA 4.8. And these are the places that got high yield savings account. $0 for Capital One, Brio Connect a minimum of 25, and a minimum of 10 for Betterment at $5.50. $5.50. So those are your high yield savings account and the interest rates on it. So let's go back over here. Here. All right. Why retirement savings and Roth IRAs tend to outlast traditional 401ks. Now, here's an issue with Roth IRAs. There's an income limit on Roth IRAs. There is an income limit on Roth IRAs. And most people like, what is that income limit? All right, so income limits for 2024. The income limit for Roth IRAs are 161,000 for single filers and 240 for those married jointly. So those that are at 150 as a single person, you're okay with contributing to a Roth IRA. Well, however, if you make over that, you have to probably go into a traditional IRA if that's the case, right? So there are limits. Like I say, there are income limits on those. And people are like, well, most people don't make over 100,000. If they're working in tech and they've been working for a while, that Roth IRA doesn't do anything. It's cute. It's cute. All right, so here we go. What's their reasoning? All right, so okay. A new report from American Accounting Association explores whether it's better to pay taxes on retirement accounts when the money is invested or later at the time of withdrawal. Specifically, it compares how retiree savings last for people who have tax deferred accounts like 401k versus those who currently taxed accounts such as IRAs. The findings may come as a surprise. All right, cool. Overall, yeah, you can see it. Overall, the research indicates that paying taxes on retirement accounts up front will help retirees stretch their money longer than those who pay later. Currently, taxed accounts like Roth IRAs, there are Roth 401ks, but they're talking about Roth IRAs where you get a pre-tax and taxed. So you may put your money in on a tax side, meaning I'm going in, take this money out now. When I hit 59 and a half, I can withdraw that money and go from whatever, or leave it in there tax and let it tax deferred, and let it do its thing on the tax deferred side. So you get a combination of both, which makes sense for a 401k where it's only tax advantage. You don't get the option of having a Roth side and a traditional side. So to me, that just makes sense. I'm not going to read this whole thing because I think you kind of got it now. But remember, there are income limits on Roth 401ks. What are the income limits on Roth IRAs? What are the income limits on Roth 401ks? All right, so the income limits on the Roth 401k. That's contribution limits. I need income limits. Let's go back. Income limits on Roth 401k 2024. We got contribution limits. Okay. So, no, it's telling me Roth on the IRA side, but it's not giving me on the 401k. Yeah. So the income limit on the Roth 401k is no income limit. There's no limit on that. So that's why a lot of companies offer the Roth 401k. But there is a contribution limit on the Roth 401k. Oh, that's 23,000. On the Roth IRA, that's 7,000, 8,000 after 59 and a half. So that's where that comes into play. All right. So you can understand if I got a Roth 401k, I don't have an income limit. So a lot of people should probably start offering that Roth 401k because your pay could increase over the given limit of the Roth IRA. All right. Fidelity had a data breach. 28,000 customers. This is a FYI for you. I'm not going to read this. I'm just putting it out there. Fidelity had a breach. Fidelity had a breach. 28,000 people. All right, Hashi. Hashi Corp had a good earnings call. A good earnings on Q4. But guess what? Their stock was up. But guess what's going on with Hashi? The software company is weighing its potential sale. They're looking to get acquired. Who would acquire Hashi? Would it be Microsoft? Would it be VMware? Broadcom? How about Apple? Who's going to acquire Hashi? Who is the best fit? Will it be Amazon? How about Google? Who would acquire Hashi? Let's get into it. Hashi, a provider of software that helps companies operate in cloud, has been considering options, including a sale. People with knowledge of the matter. The San Francisco based company has been working with a financial advisor in recent months to gauge interest from potential buyers, according to People, who asked not to be identified because the details are private. They ain't private no more. Hashi has already held exploratory talks with other industry players, they said. Shares in Hashi have fallen about 11% in New York over the past 12 months through Friday's close, rose 16% after trading. The company has a market value of roughly 5.3 billion. Will the government buy Hashi? Because the government has a venture fund. Will the government buy Hashi? Right here. The DoD launches an investment arm to fuel innovation. The Department of Defense is standing up an organization to route more private sector money towards key technologies such as quantum computing and advanced materials. This came out in 2022. We're in 2024, and I talked about this. And the Department of Energy also has a capital venture fund. So, would it behoove the government to buy Hashi? Who is going to buy Hashi? All right, deliberations are ongoing. Blah blah blah. Hashi software helps companies in a range of industries set up their digital infrastructure in the cloud, which can lower costs and speed up time it takes them to bring products to market. The value of the software deals has risen 30% this year, roughly 74 billion as mergers and acquisitions activity picks up globally. Bloomberg compiled data the data show. This the sector has already delivered one of the biggest announced transactions in 24. Synopsys agreement to buy software Ansys for 34 billion. I don't know who Ansys is. Let's see. Any comments? Nah, no comments. So who will buy Hashi? Who is a good fit? Do I think AWS is a good fit? No, because then that means that everybody's going to be going in and redoing their code deploy and redoing their cloud formation. And even though they have YAML, it may be a good fit, but now everybody's going to be like, oh, do they stay agnostic? Does the Linux Foundation buy Hashi? Who's going to buy them? Who's going to buy HashiCorp? Almost half of Warren Buffett's $364 billion portfolio is invested in one stock. What stock do you think that is? Is it Coca-Cola? Given his wide recognition as one of the world's blah blah blah, we're going to among the top holdings is tech giant Apple, which makes up a whopping 43% of the entire portfolio. Apple. Double APL. Apple at 172 has a rating of A. Here we go with that. Let's show the dividends. You see that 7 look 10, 15, 8, 6, 7, 5, 4. Just but as long as it's increasing, that's what we care about. All right. You can download the report. Scroll back up. Strongly perform. It is a buy. It is a buy. Doesn't have a volatility score. Is considered a large cap. Growth grade, quality grade, sentiment grade, stability grade, valuation grade. Okay, this one right here says it's the performance versus the S&P. The S&P is in the green, and then the performance down here is price performance is down here. That's what it is. They're giving it an A to buy. Increasing dividends over time. And this goes on. And they're saying it's a strong buy. Okay. So that's what is in his portfolio. I'll move this back. A screaming buying opportunity. While we can't read Buffett's mind, we know he appreciates high quality business first and foremost. Apple certainly fit the bill in 2016. A key part of the economic moat is the powerful brand. Apple is a technological and cultural icon thanks to incredibly popular hardware devices, the most notable of which is the iPhone. This single product generated $201 billion of sales in a fiscal year. Look through Berkshire's top holdings, and it's obvious he appreciates strong brands. Coca Cola and American Express are two large positions whose brands resonate mightily with with consumers. Right. So Apple is a buy. Apple is a buy. Should you buy right now? Apple has been a fantastic investment, and Berkshire Hathaway still owns a sizable stake, 43% of it. If you don't believe in buying individual stocks, get the ETFs. All right, three cloud computing stocks to buy for long-term growth. What do you think the cloud computing stocks are? All right, there you go. Amazon, Microsoft, and Alphabet, which is Google. Again, you can buy them in an ETF. You don't need to buy them individually. You can go get them in an ETF. But the cloud computing industry is projected to return or grow at 16.4% annually until 2029. So we got 5 years of growth at 16.4%. What ETF has Amazon, Microsoft, and Google in it? A lot of them. A lot of them. Right? We don't need to guess on this. There's no, I'm not gonna go through what they're saying. I'm not gonna go through all this. I think you got the idea here. You can read this for yourself. I give this to D and y'all can go read it. I talked about defense contractors the other week and what they're doing, right? I talked about quantum today. I talked about AI. Also, and now I'm talking about cloud. There's one other industry that I'm leaving out. And I'm gonna leave it to you to try to guess what that is. I talk about them all the time, though. It's one industry that I'm leaving out. Talked about quantum. I've talked about AI. I've talked about defense. I've also talked about cloud. It's one other thing I'm leaving out. I'll talk about it next week, though. But what am I going to talk about? What other industry that I talk about all the time that I'm leaving out? And actually, it's two industries that I think about. It's two that I'm leaving out. But it's two industries I'm leaving out. One more. Space is one. Is one I talk about all the time. That's one. But it's another one. Think about it. I've talked about space too, but I'll bring it up again. It's another industry that I leave out. All right. Mm-mm. Ain't real estate. Nope. Fintech as Taylor. Fintech. But we're gonna talk about Monday. We're gonna talk about finance, cloud computing, Linux, and training. Family offices have tripled since 2019, creating a new gold rush on Wall Street. Let me see how much y'all pay attention. How many millionaires do we produce every single day in the United States? How many millionaires do we produce every day in the United States? Let's go. The number of family offices in the world has tripled since 2019, setting off a new race among private equity firms, hedge funds, and venture capitalists. According to the new report from Preqin, the number of family offices worldwide topped 4,500 with a concentration in North America. We produce 1,700 millionaires every day. Experts say family offices now manage 6 trillion or more and their rankings are growing. Family offices, 6 trillion or more. I've talked about family offices. Erica Williams has talked about family offices. Let's talk about them. All right. So North America has the largest share of family offices with 1,682. More than half of all the family offices assets in the world are in North America. Experts say family offices now manage 6 trillion or more and their ranks are growing. There are more than 2,600 billionaires in the world, almost all of them requiring almost all of them requiring a family office, and the number of people in the world worth 100 million or more. The typical threshold for a family office has surged for more than 90,000 according to WealthX, an Altera company. In other words, there's room to run, and they're showing the growth over time. The family office boom has caught the attention of private equity firms because they got dry powder sitting around. Caught the attention of private equity firms and other alternative managers who are looking to raise funds. Blackstone, KKR, and Carlyle have been expanding their teams, funding events, building products, and catering specifically to family offices. The larger private equity managers are trying to compete there by putting their resources and time and insights. I guess research insights from Preqin. Ultra high net worth in ultra high net worth investors and family offices are really on the radar. On the surface, the family offices are dream clients for alternatives. For years, family offices sought basic wealth preservation with traditional stocks and bonds portfolios. Now they're more like institutional investors seeking higher long term returns with private equity, venture capital, hedge funds, infrastructure, and real estate. Family office have the highest allocation in hedge funds of any type of institutional investor. Granted, the past 2 years have been tough on private equity, venture capital, and hedge fund returns. All right, so let's go look up on average. Let's take average to start. I think it's 10 million. I think it's 10 million. I don't want how to start, but I think it's 10 million to start a family office. Let me look. Okay. Family assets exceed 100 million to 200 million. But there's a large one and then there's a small one. They come in sizes. All right, here we go. A traditional single family office, this manages affairs of a single wealthy family as opposed to a group of wealthy families. And then a multi-family office. And then a virtual family office. Let me see. I'm looking for the number. All right. All right. So here it says it could cost 1 million to 2 million per year to operate a small family office with up to 6 employees, 3 to 4 million per year to operate a medium-sized family office and with 15 employees, and 8 to 10 million with 25 or more. Between 50 million to 100 million in assets is generally considered to be the minimum for establishing a family office in order to cover expenses and overhead. For families with assets in the range of a multifamily office or a virtual family office, um usually the cost is efficient. Once a family office assets exceeds 100 million to 200 million, then it might be reasonable to start a single family office, right? So their family office come in different sizes. And I remember when I looked this up, I believe you can start at 10 million, but I need to double verify that. I have to go through the IRS webpage and see if that's true or not. All right, Treasuries, 39 billion auction of 10-year notes goes badly. A $39 billion sale of 10-year treasury notes was met with poor demand on Tuesday, dashing expectations that buyers would continue to step in amid a onslaught of supply. The auction tailed by 1.1 basis points in a line that demand in a sign that a demand of notes was low. Indirect bidders took an average share of below average share of 64.3%. In other words, we weren't interested. Want nobody buying your notes. All right. I'm gonna go over this another week, but did anybody get a chance to look at Investors Day from the NASDAQ? Did anybody take a look at Investor Day? Did anybody even know Investor Day exists? Put a one in the chat if you knew Investor Day existed. Put a one in the chat. Put a two in the chat if you didn't know. Put a two in the chat if you didn't know. I'm here to help. Did anybody even know Investor Day existed? Didn't even know. See, that's what we're here for. I'm here to inform you. I'm here to help. All right, let's get busy. Let's talk about it a little bit, and then I'll do a deeper dive in another show about Investor Day. All right. So let's talk about the 6 takeaways. All right. On March the 5th, the NASDAQ hosted its 2024 Investor Day, providing an update on the company's strategy, its plan to deliver its next phase of resilient and scalable growth. And with Investor Day, you they have speakers, the whole nine. Let's just go over the overview, and then we'll talk about Investor Day 2024 next week. I'll dedicate next week for Investor Day. All right. So Investor Day, Nasdaq senior leaders outlined the company's key 2024 priorities and reaffirmed its medium-term financial outlook. The company also discussed its capital allocation strategy, the benefits of the vision structure, and unified with one NASDAQ go to market approach. All right. So integrate, innovate, and accelerate. NASDAQ is strategic priorities in 2024. Integrate. NASDAQ plans to continue successfully integrate as I guess add a Dezina to unlock synergies and drive operating leverage. The company expects to action approximately 70% of the targeted 80 million in net expense synergies ahead of plan. Right? Innovate. Nasdaq is focused on amplifying innovation across enterprise by making generative AI tools available to 100% of its employees by 2024. The Nasdaq will leverage its technology foundation to deliver an AI opportunities. How many people knew that the Nasdaq was a company? Here we go, right here. Nasdaq jobs. You can go to Nasdaq right here and look at careers. Right? They got careers right here. 30 full time, one part time. Locations. Here are all the locations they have right here. Let's look and see what the two they got in Georgia. A senior director corporate strategy, and an enforcement counsel. But you can go and look through. Job type, regular. Job family. Say you want to work in project management. You want to work in broadcasting events. They got payroll, strategic planning, sales, system administration. I'm just curious. Let's see what they say. It's in Canada. Monitoring performance, 2 to 3 years of experience, understand Terraform, AWS, Java, Bash, AWS certifications will be an asset. That's what they're doing as a sysadmin. This was posted 12 days ago. You go work for NASDAQ. Closed it, did I? Oh yeah. All right, accelerate. NASDAQ will continue to accelerate the impact of divisional structure to activate and unlock new growth opportunities that will drive business. Two, enhancing the shareholder value via robust capital allocation strategy. Financial technology division is positioned to address clients' most critical challenges. Strategic innovations will drive continued growth in capital access platforms. Market services remain a robust capital generator, reiterating medium term financial outlook. Right? So that's what they're thinking. I'll talk about the NASDAQ more because I don't know if you all knew that was a company. So I got that pen. We'll talk about it. All right. Hackers took over Cricket wireless accounts and shut down phones and took over financial apps on the Cricket phone. Who worked for Cricket? Who out here working for Cricket? How people take over phones. So they're taking over phones and anything that you got your financial apps, they got into your phone and took over your apps. So it says, let me blow it up. It's a little small. And let me get rid of that. All of one family smartphones were taken over, including their banking apps, their wireless accounts, and after their wireless accounts was hacked. Now, more than 4 months later, they're still trying to regain control of their digital lives. The single account was linked to 5 phones, and one day, every one of them was shut down. They sent they was they went into an SOS mode, meaning we weren't able to use the cellular service, couldn't receive phone calls or text messages. He did not want to use his last name or exact location because he feared scammers are still targeting his family. Oh shit! They know who you are. Mike and his wife are blocked from their Amazon and social media accounts. They actually physically got into their phone, We know this because of the fact that the apps were added onto her phone that she didn't add them. Contact numbers were changed to friends and family, he said. Contacts were added into her phone. We must have added easily 100 we must easily have had 100 account passwords changed. They're also currently locked out of their investment apps like Robinhood and crypto app. They were where they had a total of about $1,200. They also had $2,000 stolen in Apple Cash and gift card stored on their phones. There were bank transfers that were attempted. Luckily, we stopped it in time. They were able to stop that. The family also lost the ability to access anything to via two-factor authentication. His wife was locked out of her email. Mike said the scammers got complete access to their lives. It got down to it got down to because they have access to our phones. We had notes on our phones that which contain our garage code information. So they're able to open the house and close our garage if they wanted to. Mike also said he's disappointed in his cell phone carrier, Cricket Wireless, over their response. We tried calling Cricket customer service hotline, helpline. Every time we called, nobody can help us. Nobody can do anything. They can't help y'all. They can't help y'all. Cricket can't help y'all. So the question is, was it a virus that they opened up on their phone and got access to their phone? And what does that look like? And what does that look like? Right? That needs to be investigated. All right. This is a LMM summit. You all don't have to go, but it's driven behind AI. I wanted to let you know that this was out here. It's virtual from Packet. Anybody that was on the meetup on Wednesday heard me talk about Packet, but Packet is having a summit for LLM language learning models tailored towards helping you understand how to build them. I think it's $3.99 for it, but you can also, if you're in Safari, Safari has a class on LLMs and how to make language learning models. Want to make that announcement. All right. Intelligent officials warn pace of innovation in AI threatens the U.S. Governments are struggling with how to respond to rapid technological development, particularly related to AI. The U.S. intelligence officials warned on Monday that the United States faces a growing threat from an accelerating pace of technological innovation and proliferation, and that governments are struggling to adapt and respond to these changes. As machine learning models are moving AI into its industrial age, there will be potentially huge economic impacts for both winners and followers, and unintended consequences from rampant deep fakes and misinformation to the development of AI generated computer viruses or new chemical weapons. The U.S. intelligence community warned it's an annual threat assessment published on Monday. I'll download this. I'll keep this open and I'll download this. I'll download this. We'll probably discuss this another time. I don't have time to go through Bidenomics. I got this on here. I can do a whole show on this. Social Security 2025 cost of living increase will be far smaller this coming year than it was last year. It says as inflation cools, the COLA is expected to be less than 3%. So we won't get a huge bump, but there'll be some bump. Right? Older and wiser now means being richer. Baby boomers own 72% of the nation's wealth. 72% of the nation's wealth. Facts, no fluff. Cricket can't help with. They ain't got enough people on staff to help with that. They ain't got enough people on staff. All right, 72% is owned. See, the report reveals that Americans 55 and older control 72% of the nation's wealth, highlighting a major contrast with financial realities facing those younger than 55 who see little to no growth in their financial assets. The wealth concentration among the older generations raises important questions about economic equity and the financial prospects of younger Americans. It says the report, uh, I guess, it elucidates the generational wealth divide. Americans 70 and older own 30% of the nation's wealth, while those between 55 and 65 control 42%. 42%. In contrast, the households between 40 to 54 own 20% of the wealth, and those 40% and younger own 7%. So that says to me, uh ladies and gents, if you're dating, you need to be dating in the 40 to 54, if not 60, 55 to 65. So if you're a 20-year-old man and you're looking for a sugar mama, she is in between 55 to 65. And ladies, if you're looking for a sugar dad, he is 55 to 65. We met one, D. Was how old was he? Was he 70 or 55? Was he's 70? Yeah, I think he was 70. So there you go. You don't have to date older. Facts are facts. Facts are facts. All right. Mm, I made over $400,000 from a side hustle on top of my six-figure salary last year. I love diversified income, and this has been game changing. Here you go. Let me back out of it so you can see this lady. I make 125,000 a year as a port authority in of New York and New Jersey. I own the consulting agency Juntero Design, which began as a side hustle. I am passionate about Juntero's new subscription-based model, which provides a range of services for a fixed rate. Right? She had her first child and was told we wouldn't receive a merit based pay raise at work. So I wanted ways to supplement my income. My father always told me and my siblings that if your spouse dies, you have to be able to cover the mortgage and support your family. I'm a big advocate for diversified income. So I started my side hustle with my husband. Now it's a corporation that we co-own, split into two subsidiary companies, Juntero Design and Juntero Technology. My husband does the technology, I do the design. Today is a full-fledged design and technology business, but it all started with me taking on small projects on a platform charging less than $20. She watched a lot of YouTube tutorials, web design, photo editing, graphic design, architecture design, and interior design. People gravitated towards my architecture and interior design services. Initially, I kept my prices low to build a portfolio and so forth. She makes 400. She made an extra 400,000. She was like, I made 55,000 that year and over 200,000 the next. Then in 2023, I exceeded 400,000. Right? She got a side hustle. This is what I wanted to talk about right here. Let's get busy on this. Let's talk about this. A male humanoid robot unveiled in Saudi Arabia. It then inappropriately touched a female reporter. A male humanoid robot appeared to inappropriately touch a female reporter during a presentation. Named Muhammad, it is Saudi Arabia's first humanoid male robot. Muhammad is fully autonomous and did not deviate from its expected behavior, the maker said. Saudi robotics company unveiling a male humanoid robot didn't go as planned after it appeared to inappropriately touch a female reporter. Saudi robots company QSS debuted Muhammad, the humanoid robot, at Deep Fest in Radia. Is that Radia? Radia? Riyadh? I mean, I'm messing that up. Last week, the robot dressed in traditional Saudi attire spoke Arabic and English. In Deep Fest post on X, Muhammad was described as the first Saudi robot in a form of a man, as well as a national project to highlight Saudi Arabia's AI achievement. During the presentation, a reporter for Al Arabiya, Rawa Qasim, stood in front of Muhammad as she spoke to the audience. A viral video of the incident shows the robot appearing to extend a hand toward forward to touch her backside. Good game, good game, girl. Good game, girl. In the clip, you can be seen responding with a stern glare, followed by a raised palm at Muhammad before she continues to talk. Let's see. Let's watch it again. What you think? You think that was an accident? Think he was reaching out to let her know he wanted to talk? He wanted to say something? Let's watch it one more time. Humanoid robot is fully autonomous with AI. All right, QSS, which did not immediately respond to BI's request for comment, told Metro the robot was fully autonomous and was operating independently without direct human control. The robot firm said staff had proactively informed all attendees, including reporters, to maintain a safe distance from the robot during this demonstration. According to Metro, QSS added that it had reviewed the footage and the circumstances surrounding the incident, finding that there were no deviations from expected behavior. It said it would take additional measures to prevent anyone from getting close to the robot within its areas of movement. That's what it said. IBM laying off amid push towards AI. IBM on Tuesday notified employees in its marketing and communications division that it's making cuts, the largest tech company to trim its payroll. IBM indicated a workforce reduction in January, and it announced its fiscal fourth quarter financial results. It doesn't say. Let's see. Last year, um, Krishnan said venerable tech pioneer massively upskilling all the employees on AI as it replaces 8,000 jobs with AI. 8,000 jobs with AI. Dollar Tree misses earnings and plans to close 600 Family Dollar stores in 2024. They're closing stores, closing 600. They missed their earnings. I mean, I think Family Dollar and Dollar Tree could go down, could shave some of their stores. It ain't no need to have one on every corner. Just my thoughts there. So they're closing 600 and in the first half, and another 370 Family Dollar stores, and 30 Dollar Tree stores are expected to close over the next several years. Dollar Tree has 16,774 stores, of which 8,539 are Family Dollar stores. Why y'all got so many stores, my G? Your money going to building out stores and inventory. Biden proposes $10,000 tax breaks for first-time home buyers, starter home sellers. $10,000 tax break is being proposed for first-time home buyers. This may be maybe something somebody can get into. Right? I should have talked about this on my other side when I was talking about quantum. But here we go. Already up 104%, Wall Street predicts that quantum computing stock will surge another 58%. Quantum. I talked about the 7 quantum stocks earlier. If you missed it, go back and catch the replay. Roll back quantum stocks. If you're not gonna learn it, at least you can make money from it. Major question of the day. College is still worth it. Research finds, although these majors have the lowest rate of return. Recent college graduates full time earn 24,000 a year more than those who have a high school diploma. Additionally, finishing college puts workers on track to earn a median of 2.8 million. Stop letting people dupe y'all and tell y'all that you ain't gonna make no money. So you can earn 2.8 million over their lifetime compared to 1.6 million with a high school degree, according to College Payoff, a report from Georgetown University Center of Education and Workforce. Wage premium for workers with bachelor degrees or higher. Right? Bachelor degrees are higher. In general, bachelor degree holders earn 75% over their career. The report found 75% more. And in many cases, the higher the level of education attainment, the larger the payoff. However, a lot still depends on your choice of major. College majors with the highest and the lowest return. All right, let's go. All right. Educational Research Journal found that engineering and computer science majors provide the highest returns in lifetime earnings, followed by business, health, math, and science majors. Education, humanities majors, and art majors had the lowest returns of the 10 fields of study considered. I don't think people pick worthless degrees. I think a lot of times people don't research what they can do after they have those degrees. Because you can go get a psychology bachelor's degree, but if you ain't getting a PhD, then, you know, right? So again, it all depends on the market and what that is looking like. Because you can go get a computer science degree and do nothing with it and just have a computer science degree. So you got to do some research and not rely on the counselors because they don't know half the time either. Right? I'm not gonna read all of this. You kind of got the gist of where they're going with this. It's the same thing I say. STEM, do you get into business, do your thing, make your money, exit. I don't know if y'all saw this. An extreme wealthy as as power must be regulated. A 31-year-old heiress is letting 50 strangers give her $27 million fortune away. Marlene Inglehorn. That's Marlene Inglehorn. Hadn't given much thought to the wealth that surrounded her as she grew up. She's always considered the fortune inherited from Friedrich Inglehorn, the 19th century founder of the German chemical giant BASFSE, to be her family money rather than hers. Then she came into the 27 million from her late billionaire grandmother in 2022. She had already co-founded a group, Tax Me Now, and discovered a community in various progressive groups for guilt-ridden rich people like wealth redistribution advocates, resource justice, and patriotic millionaires. But now, 31-year-old, now the 31-year-old had to grapple with the fact that she was a millionaire in her own right. Though, so she set up an idea to let 50 strangers decide how to give it away. Those strangers, also whom live in Engelhorn's native Austria, will meet for the first time this weekend at a hotel in Salzburg, dubbed the Gutter Rat, or Good Counsel. They were chosen through statistical process run by research group Foresight, and range in location, age, race, socioeconomic background, and other demographic factors chosen in an effort to be representative of all of Austrian's population. Could you help her give her money away? What would you help her give this 27 million to? 27 million. Nelly sold his catalog for 50 million. Was it worth more? Helmet Chili. I see you. Nelly sold his catalog for 50 million. Was it worth more? Should he gotten 100 out of it? Do you Has Nelly made 50 million over his lifetime? He sold his catalog for 50 million. He has no regrets. And I don't want to talk about it. Five paying remote jobs that pay up to 300,000 in 2024. Enterprise SaaS sales, a patent attorney, a PR director, a business development manager. I agree with that. I agree with this so far. A technical support manager. Those are the ones that say that you work remotely and you can make over 300. I can agree with this list. I can agree with this list. 61 robotic companies that are hiring. 61 robotic companies that are hiring. I'm not going to go through all of these, but I will post these. So you can go look at the robotic companies that are hiring. I'll let D post these. 61 of them. The VA is cutting 10,000 jobs. They're cutting 10,000 jobs. So the Veteran Affairs is asking Congress for a substantial increase in the 2025 budget, but it's also looking to decrease its overall healthcare workforce headcount through attrition. The VA is asking for $369 billion in fiscal 2025, and nearly 20% from its enacted spending levels. The department is counting on those funds to handle one of the biggest expenses of the VA healthcare and benefits in its history, which is on is happening under the PACT Act. Let's see. Mm-mm. All right, the PACT Act have all led to record growth in the community uh, care year over year. So they want to grow with that. I probably have to look into what more the PACT Act has in it. Its overall head count by 2025. So they going already. The VA's 2025 budget request supports more than 448,000 employees, a more than 10,000 in decrease from 2024 estimated work levels, with most of the workforce reduction coming from the VHA, right? 10,000. JP Chase Morgan failed to meet compliance in trading, so they got hit with a fine of 350,000. Georgia, booming tech and startup scene is helping Atlanta become the Silicon Valley of the South. There it is the third place to move, the third place on the list to move to. Um, Atlanta, but I'm telling you, Atlanta is full. Atlanta is full. Atlanta just sent me a text and they said they are full. They said we need no more. I don't know why y'all moved to Atlanta. Listen, I had this conversation this morning with my cousin, and we were talking about this. Stop moving to Atlanta and thinking you're gonna be able to make it on 30,000, 40,000, 50,000. I told you Macon was the next city to develop 3 years ago. Augusta is now. I said Macon 3 years ago. No one cares about your funky 40,000 or 50,000 in Atlanta. It ain't happening. We don't care. We're full. Atlanta has become the breeding ground for billion-dollar startups due to business-friendly tax structure. If you didn't catch my play, I told you all to buy in Covington because they're building out those data centers in Covington. 430 acres. I talked about this. Covington. They're building technology park out in Covington. I'm gonna say it again, Covington. Y'all will move to Atlanta and be like, I'm in Atlanta, but you live in Covington. It's not Atlanta. It's not. I'm gonna pull it up. Covington Data Centers, Georgia. Right here on in the Rockdale Citizen. New data center may be in the works in Covington and Newton County. Amazon purchased 430 acres. 430 acres, but they're not the only ones that's building data centers. They're building data centers right off of 20 as well too, 20 East. Down there, right down there in Conyers, right down there, Sigmund Road ish area. So anybody that own land and property in that area, hold on tight to your stuff. Hold on to your love. You got to hold on to your love. Hold on. Mm-hmm. My first mistake was I wanted too much time. I had to have morning, noon, and night. Hey, I could go on. Don't waste your time. Let's see. Are we on this one? Nope, we're not on that one. We're over here with Georgia. All right, here we go. Prologis launches a $25 billion dedicated data center arm led by Compass co founder Chris Curtis. Warehouse and logistics leader Prologis comes by a strategic pivot into hyperscale cloud development space, honestly benefiting from its substantial collaboration in U.S. Tier 1 markets with partner with Skybox Data Centers. $25 billion. 25 billion. The company comes in the US data center ambitious. They got Skybox and Prologis. Let's see what they're buying this at. M 30 megawatt, 189,000 square feet project in Elk Grove Village. This is just outside of O'Hare Airport, which has become a primary locale in the suburban Chicago cloud market. Right? Prologis and Skybox have also teamed up for the 30 megawatt data center in Sterling, Virginia. Sterling, Virginia. They're focused on AI, hyperscale, and cloud computing. All right. I'm going to close that. All right. Let's get into my petty stuff. We'll do one and I'm out of here. I think this one is the best one. I'm looking to see if make sure nothing else was important. Oh yeah. Facebook owner Meta is to build an $800 million data center in Rosemont. Rosemont. 208. This is in look like it's Minnesota. It's in Minnesota. It's in Minnesota. So they're building an $800 million data center. Get into them REITs. Go get into those data center REITs. We talked about that. Here's another one. Oh, Plano Data Center. This is the one I was talking about with Blackstone. Blackstone buying a data center. I mean, building the data centers too. Yeah. Securing 600 million. 600 million for this data center. Plano Data Center. It's in Dallas. We talked about Georgia. But let's get into this. I paid rent to my boyfriend since 2012 and helped raise his child. He's making $200,000 on the sale of his home. Am I entitled to half? Let's get into it. Because she wants to know. Data center REITs. Let me hold that thought. I'll come back to it. Hold that thought. I'll come back to it. Data center REITs. All right, let's go. I have a question. I am not sure who else I can ask without ruffling feathers. I've been with my significant other now for 12 years. We're not married. He had a 2-year-old son when I met him. His son is now 14. We have a son together who is 2 years old. We've recently put an offer in on a new home and it was accepted. We have come up with a percentage split based on our incomes, which works out to be a 58 to 42 split. I moved into his home around 2012. I pay him monthly rent and I also buy all the groceries and household items, laundry, detergent, toilet paper, paper towels. I take care of the landscaping by mowing and paying half for someone else to mow. I pay half for the mulch and I pay for all the plants and the greenery myself. I've contributed to decorations and the upkeep of the home as well. Only he is on the mortgage and the deed of the home we live in. He's looking at about $200,000 profit when he sells his home. My question is, what is fair? Hmm. This shipper, shipper, shipper. Ma'am, ma'am. This is this foolishness I be talking about. People like, why y'all want to get married? Marriage is for children. Marriage is for like this. This is foolish. Ma'am, you've been with him for 10 years raising his child? And girl, bye. Here we go. He and see, there's a lot of money out of my pocket that's spent on food hygiene items and households. I also taken care of the home all those years and helped make it what it is today. I'm not looking for financial gain. Yes, you are. Say yes. Say yes. I'm looking to recoup what I put in. I want some ROI on what I put in. Yes, you are. Yes, you are. This is the lie she has told herself. I'm not looking for a financial gain. It's his home. Should I get half? It's his home. Oh my goodness. Why would I ever look for some money out of this? Oh no. That's not me, not little old me. Don't waste your time fighting lies. Man, you said it's a man? Even worse. It's even worse. Let's go. I'm not looking for a financial gain, but I think maybe he should cover the realtor's commission when we sell this home, or maybe cover a renovation project or two after we buy a newly jointed owned property. I will continue to pay for the older son expenses as he would be living in our new home most of the time. It's a 50-50 custody, but he is with us 75% of the time. That's stupid. I don't care if it is a man. It's still dumb. You're co-parents, not but you're co-parents, but not co-owners. That presents an unusually tricky dynamic. Real estate prices have risen significantly in the wake of the Great Recession, and you have not benefited from any of that equity. You won't get Nathan. Right? For that reason, he should pay for the real estate commission on the sale of his home. You're paying rent after all, and he's making $200,000 profit. He's profiting off of you. Would it be nice for him to offer you a split that 200,000? Sure, if you also split the real estate commission on the sale, but I don't see that he is obliged to do so. You have organized your lives in such a way that is not entirely equitable from a financial point of view. Because your partner owns the house and he has the balance of power. You have taken on equal responsibility as parents. But I find it curious and frankly somewhat unsettling that you pay for all the groceries and you're solely responsible for management and upkeep of the garden, both in terms of money and in labor. Are you both raising these children? Is it's a question of yours, mine, and ours, regardless of whether they are biological children or not. That is that is you both chip in equally and don't split hairs over who's paying what for whose child. Excuse me. It's important for kids to feel like they're loved equally, as I'm sure they are. When his child goes to college, that is a separate conversation, given that he is a biological parent and higher earner. An alternative to splitting 50-50, to splitting the 200,000 50-50, one would be entirely a gesture of goodwill. It's for him to invest $100,000 of profit on his home in your new home. That way, both benefit from at least half of the equity. in your new home. You will be joint owners, splitting all the bills eventually evenly. Just because he has 58% share of the property should not mean that you continue to pay for all the groceries and the landscaping. You're obviously in a relationship for long term. Treat it with a fresh start. No, no. Did y'all hear about this NFL Tesla player whose financial advisor stopped him for paying 100,000 over asking price for this Tesla Cybertruck? He was gonna pay 100,000 over, and the financial advisor was like, "No, sir, sit down, have several seats. You ain't got it. It's a horrible investment." And what about this one? I thought this cracked me up. My unmarried partner may need a nursing home. Who will pay for his care, and will I be able to stay in our home? let's, let's get into it. I thought it was funny. I am seeking information about shared home that my partner and I co-own with the rights of survivorship and the subsequent beneficiary deed for four adult children from previous marriages. We're in Arizona. If one of us needs to go to the nursing home, is the other safe in the home? Or would Medicaid come after our houses? And they will come after their houses. I should note that my partner's assets outside of the home are around 100,000. His home is worth 600,000. My assets are 15 times those of my partner. Am I required financially to support him should serious disability occur? We were previously listed as domestic partners for insurance purposes prior to receiving Medicare 2.5 years ago. She's like, sir, what Medicare assistance costs for his care? Not me, but Medicare for him. I just want to make sure he all right. He don't need nothing from me. Would it make sense to put my assets into a trust? Most assets are in traditional IRA and 401k. Dear reader, long term care planning can be tough and scary. The short answer, it sounds like you're safe, your home is safe, but that doesn't mean you shouldn't do more long term care planning to be sure. First, let's clarify. Medicare is a federal healthcare insurance individuals are eligible for beginning at the age of 65, but they pay for their own health care through copays and deductibles up front. The program does not assist very much in long-term costs except for very few specific circumstances. Medicaid is a joint federal and state program for low-income individuals who can afford health care, and in situations regarding long-term care, such as residents in a nursing home or memory care institutions, the agency picks up the tab. In Arizona, the Medicaid beneficiary or the co-owner of the home, usually a spouse, must live in the home in order for the home to be exempt from the applicant's assets. If no one is living in the home, the applicant must have an intent to return, which is, as you could guess, the intention to move back into the house. This is not your case, but it may be for fellow reader, so it's worth mentioning. Also, no one is living if no one is living in the house, the applicant can have maximum home equity, which is the value of the house minus the debts against it of no more than 713,000. The estate recovery process is more of pressing concern in that case, Medicaid would only try to get back the money it spent on your partner's medical bills. The federal government requires each state to try to recover some of its funds spent on beneficiaries' care. So it's not a free ride. It's we need our money back. It's a loan. It's a loan, right? So they look at the person's assets, including the home after death. Typically, in cases for married couples, nothing is touched until the second spouse dies. It is important to note, however, that your titling structure, rights of survivorship, was a good choice in this instance. So, if your mom and dad are married and the dad goes into the nursing home or the mom goes into the nursing home, as long as the value of it is not over 713,000, then the assets don't have to worry about that. But for children who are sole guardians or sole caretakers of those children, and you decide to put them in a nursing home, that house may not come back to you because you may have to fulfill the Medicaid need to pay that back. And so they're gonna come after the assets. So you don't get mad at your mama and them. You may need to put some things in place so your mama and your daddy or your mother or father or something like that is taken care of. How many of y'all knew this? Now you know. Y'all are all up in the probate court, all in the probate court, getting your house snatched. Right? Arizona. AHCC claim it filed only against the estate of the individual, according to the Arizona Care Cost Containment System. A home that is solely owned by the Alt CS member is owned jointly without the right of survivorship, or is owned jointly with the right of survivorship, but the joint owner is deceased, is subject to a small estate affidavit or probate. That's why I said it, or probate, and is therefore subject to the payment of a HCCS. That's a long name. Claim against the estate. Estate recovery applies to anyone who received benefits under Alt TCS, home and community-based services, was 55 or older when the benefit started and deceased according to that. The program may try to recover your partner's assets outside of the home. Let's be clear. It's always good to run your specific case by a qualified, trustworthy estate planning or elder care attorney in your state, right? As for your assets, it does not make sense to get estate plan documents in order for your own protection should you need long-term care, and also for your beneficiaries if leaving. It does make sense, not doesn't make sense. It does make sense. So you can shop around for an attorney who will know what documents will keep your assets secure and best wishes met. In order to compare costs and processes, these professionals may suggest, right? It says this also includes a healthcare proxy, but it may also incorporate trust as you ask. In the meantime, check that all of your paperwork lists beneficiaries, all your 401ks, rollovers, all your IRAs, all your insurance, everything at your job. Go fill it out today. Make sure it's a beneficiary in there. Make sure there is a beneficiary in there. Boys, these articles may be crazy, but I learn a lot. Commingling, not being on the deed. You just said I love him, Weenie. I ain't even on the deed because he my man, he my man, he my man. Nah. Sir, when you get divorced and you like, I got the house, but her name on the deed. And we seen them articles where his name wasn't on the deed, but he moved another woman in and they've been paying the mortgage, but they've been paying it off for the ex-wife. They've been paying to put the equity in for the ex-wife. Oh yeah. Oh yeah. My man, my man, my man. Your man don't know. Bo don't know diddly. Bo don't know diddly. Right? I'm gonna finish reading this. It says, in the meantime, check that all your paperwork lists beneficiaries are payable on death so they avoid probate. Avoid probate. A will goes to probate, a trust does not. A will goes to probate, a trust does not. It doesn't hurt to run your situation by an experienced Medicaid expert in your state. Either Alt TCS offers a free consultation to clients for finding care or filling out application for the service and does not offer more extended assistance. All right. That's all I had today. That's all I had today. We could talk about setting things up and all of that, but I wanted to make sure I get all the juice out today. I want to make sure I get all the juice out today. I hope y'all learn something today. Don't be a 50-50 contributor and you're not on the deed. Fellas, don't be paying mortgages if you ain't on the deed. Ladies, don't be paying mortgages a contributor if you ain't on the deed. If you ain't on the deed, what's the point? Because here's what y'all gonna say. And I love this right here. Don't you trust me? Hell no. Hell no. No. Don't you trust me? Don't you? No. Put me on the deed. I'm ready to sign. No. Because anything go wrong and you ain't got nothing, you ain't on the 401k, y'all ain't got benefit, you ain't got beneficiaries on the 401k, you ain't got your good. Do you remember that one where the guy went ahead and added his mama to the deed? He went and added his mama to the deed. I did I do it on this show? I don't know. I don't know. One of the shows where I talked about in the 401k, the husband took the wife off the deed and put his mama on the 401k, put his mama on the 401k. Y'all need to have court. Y'all need to have check-ins. Print that off, bruh. And in fact, don't print it off. Log in. Log in and let me see with my own eyes. Log in. Don't be out here getting duped like Legion was duping old girl. Don't be the Legions. Don't do it. Out here getting duped. Tell me he my man, I'm moving into his house. You right. You moving into his house. You paying bills in his house. You buying groceries and stuff in his house. You raise a child in his house. When he tell you to get out, you get out, you got nothing. You ain't on the deed, you ain't got nothing, you ain't dead. You don't even exist. You don't even exist. I'm trying to help you out. Fellas, same thing. Probate. If you want to go to probate court, create a will. Put it in trust. I'm out. I hear putting y'all stuff and all. I can't. I'm done. I can't. D, don't let them do it to you. Fellas, get your stuff